Mike Taylor. You know, I could tell that as a portfolio manager, you clearly value idiosyncrasy as like a very important factor in your portfolio. How does Mr. Green's work impact the way you look at idiosyncrasy? Does the rise in correlations between stocks, is that eroding the value of that or making it harder to find?
I'll give you an example. Meta and Oracle have a material problem moving forward with debt. And for that reason, I bought many, many, many millions of dollars of Apple. I went up 10% in the past 3 weeks. So if you can create a fear around debt, because that's the one thing that kills this whole thing is a credit calamity. And
So wait. So the Apple goes up because it's perceived as the safe, because it's negative debt?
because because they have to reallocate a little bit, and that tiny little bit of reallocation at the large cap from Oracle and Meta, it just trickles into Apple.
Yep.
But then you get the passive behind it on the back, and so you get a massively exaggerated move, just like we did in the past 3 weeks.
Yeah, there's a fantastic paper that is wrong that actually hits on exactly the phenomenon that Mike is
And I can
saying.
capitalize on that, knowing, or at least hope it's more than hope. Let's say a educated hope that this is actually what's going to happen to this stock, even though I hate that stock.
From a fundamental perspective.
From a fundamental perspective. Right. And so what you have to do is decide that you do not want to be right. You want to make money instead. Mm-hmm. And that is the secret to having a tremendous return, is that you have to sort of free your mind from being right and understand that there are flows in action right here that will cause stocks to exaggerate the moves a lot of Mike Green. And I cite Mike Green probably in every speech that I do, and they're like, who? Well,
yeah, we'll
that's
change
the right
that.
That's the right reaction, by the way. I just actually want to hit on something that Mike just said. So this is actually a perfect illustration of this. If you look at what happened to Oracle in the past couple of weeks, they announced a partnership with OpenAI. The stock price exploded to the top side. That actually is somewhat counterproductive because a move of that magnitude actually draws in the competitive response, right? Enough active managers are drawn to that fast money components in terms of hedge funds, et cetera, that they actually start trading against it. It's enough of a move to actually cause a reaction, and that then causes that to degrade. Cam Harvey actually just released a paper 3 months ago that identifies this, and there's roughly a 2-week to 3-week reversion process to it. So you move 30% or 25% in a single day, you're gonna draw in competitive response. But what happens if you just release a series of little incremental moves that cause you to rise 1% or 2% or 3%, right? It's not enough to create the arbitrage capability that the active managers are drawn in to take the risk to trade against you. And then the passive flows come in and validate it. And so the best strategy is to do something like what Palantir does, not announce a giant partnership, let's just constantly be announcing stuff.
So what's amazing now, and I was trying to figure out when this would happen, when we would start seeing incredible exaggerated moves in large cap names because there aren't enough active people anymore to take the other side. So it's getting a little crazy now because I believe it's largely because of passive, and that we're seeing it now. And I didn't know when we'd see it, but I think we're seeing it now on quarters, on events, on just periods of time where the large cap movements are absolutely staggering movements. And you can see it in the options now where the realized vol, I'm sorry, what does that mean? Okay,
They're
an unbelievably highly priced option that you're like, God, that could never happen, actually happens every time, over and over and over again. And now we're seeing large cap names having such unbelievable moves on the quarters. It has a lot to, or events, it has a lot to do with just this, where the active people are getting squeezed out. And so there's nobody that can come in with a hammer of rationality because the passive doesn't care, doesn't even know.